We have a sum up, right? Yeah, beautiful. Thank you very much. Much appreciated. Okay, then let's begin. And whoever will want to join us, we are here. All right. Once again, good morning, Canadian time, and good Sunday. Thanks for making it. And during the weekend. Much appreciated, of course. It's a special event we are holding with FundYourFX. First event we're making together as part of our partnership. And the idea here is to provide some, from my point of view, very important tools for traders how to work with prop firms trading, how to go with the rules and how to adjust your trading specifically to the requirements of prop firms. That's totally different from the way that you can trade your own money, of course. So that's the logic we will be talking about today. That's the main reason of this event. I will be showing you some very, which from my point of view, once again, very important tools, ways, and methods how to successfully trade with prop firms. Okay, so let's begin. The recording is on and should be shared with you either by FundYourFX directly after the event or for those of you who follow me, then by myself in my channels as well. Let's start then. I will share the screen. Let me know, guys, in the chat if you can. How do you prefer? I close my camera so you can see only the presentations, or do you prefer me to leave it this way with the camera? I'm not sure how you see it. I see it on one way on my screen, how it looks like, but I'm not certain how it appears on your screens. So let me know, please, in the chat, what do you prefer, with camera or without? For now, I will just stop the camera so we can concentrate not on my face, but on the chart. And if you have any different preferences, just let me know, please. Let's begin then. If, of course, if at any stage during the presentation you have any questions, please put it down in the chat. If you have any questions after the event, then you can simply reach me out directly. For those of you who follow, know where to find me. For those who not, you can just contact us here. I write it down in the chat. Support Vladimir Ribakov.com. Okay. Or support hometraderclub.com, whatever works for you. So, what is in today's menu? A little bit about myself. What is prop firm trading? Advantages and disadvantages of prop firm trading, strategies that you should consider to use to get funded and trade successfully. And everything I'll be presenting today is basically everything that is already proved to work amazingly. At Home Trader Club, we already counting hundreds of successfully funded traders over the years using these techniques. Of course, for the purpose of this presentation, I simplified a few things in order to present it in a way that also those who do not know me and my terms and terminology in trading would be able to understand. The crucial need of well-structured risk and money management, of course, it is maybe the most important element in what we call the prop firm trading. Is the respect of money management as a very well structured and planned one due to specific reasons, which we will discuss again here. Practical examples, of course, when we're talking about charts and where and how to make the trigger. And one second, I see here anything? Yeah, to trigger the entries, and at the end of the presentation, I will share with you a straightforward special offer we have with Fund Your FX and Home Trader Club partnership. Home Trader Club funds you. You will learn everything at the end of the presentation. So, who am I and why fund your FX? About myself, as per today, I'm still 41 years old. In August, supposed to change it to 42. Over 19 and counting years of trading experience with various of positions and experiences. I started my trading career when I was a dealer in the broker house. I don't know how many of you know that, but back then the trading was different from what we know it today. People used to call the brokers to get quotes and execute trades. So I was one of these basically dealers accepting the trades, quoting and accepting the trades. From there, I moved to be the manager of the trading exposure and the broker houses. After that, I was a former uh, private funds. It used to be called Nostro. Uh, Nowadays, it has little different titles trader. So basically, I was working for Private Funds Capital, and they funded me. Basically, what today you call the proprietary trading or the prop firms. Back then, it was slightly different structure. It was Nostro companies. They were testing you out for a while. You used to go to their offices, sitting and using their facilities and equipment, and generating trading. So that what got me the real experience, what happens when and why and how. Um, After that, at some point, I decided, you know what, 2010, to be more precise, I decided that I'm giving it a shot. I left the Nostro world, and with the capital again there, I opened my own trading business. And later on, we also established our educational brand and our educational content. We developed courses, trading strategies, indicators, which from my point of view are super helpful in trading. And of course, the flagship, and that's the Home Trader Club. This is where I am concentrating on delivering in real time both my education, why do I do the way I do things, how, when, and of course also the real-time trades shared with our members, all the trading ideas in an educational format, explaining where and why each trade is looked to be traded in a specific way. Besides all that, I am internationally certified financial technician of the CFTE, full-time forex trader and mentor since 2010, as I mentioned. Award-winning trading educator. Since 2015, we started basically every year to get our acknowledgement and can find our awards from all these years, also in Yahoo and other sources. I'm a guest speaker in trading events pretty much everywhere around the world, and I'm the owner of Home Trader Club and VladimirRibakov.com, which is the trading blog. Why do I trade with FundYourFX? So, for full transparency, I know the CEO, Sneer, his name, for over a decade. He was one of the creators of Fivers, one of the leaders in this industry who brought the prop trading into our world in the way it used to be in Nostro. They switched it. So we are talking here about absolutely 100% professionals who understand the trading business and who understand the business of what does it mean providing true funds, real money to skilled traders and how to execute it correctly. And I love to work with professionals ideally, of course, for those who I know over a long time. Um, and that's why I'm here with FundYourFX, and so do my students. And as part of this partnership, we also develop this webinar and partnership from Home Trader Club and FundYourFX, and Home Trader Club funds you. Again, I'll talk about it at the end of the presentation. They have pretty much most flexible trading terms and conditions. For those of you who know the prop firm trading already and tried some, you know that many have unrealistic, sometimes requirements that limit your creativity in trading, limit your freedom in trading, and not everyone is able to deal with it as easy as it sounds. And the reason I love the conditions of FundYourFX is because they're so flexible. Just trade. Okay? No silly limits that every day you have to deliver this and that. Every month you have to do this and that. And if you're not active for one day, then all the ridiculous previous limits lifted. You have a freedom, trade, make money. Okay, that's what the business is about, and that's how it used to be in Nostro when I was working. Yes, of course there are specific requirements which you have to respect. You cannot risk your investors' money the way you want, but the freedom to make it your own way is important. They have absolutely fantastic evaluation and mainly instant funding programs. These are the programs that lots of my private mentoring students go with. They double your account, which is amazing. Every time you reach a milestone, your account is doubled. And so if you start with 10K, you reach a milestone, 20K, you reach a milestone, 40K, and so on, which brings the max capital growth up to $3 million. And some of my students I work with one-on-one already are managing over $1 million already, which is absolutely phenomenal from my point of view as a mentor. They have fast and easy payments of profits up to 95%. Once again, these are people who understand the business. And this business is based on skilled traders and their activity and their profitability. That's why the profit share is so amazing and instant with very easy ways. I love it. And no hidden conditions. Okay? It's just again full flexibility for traders to trade successfully. You know what you do, deliver it. As simple as that. No limits, no hidden tricks and untold secrets here. Straightforward. So let's talk about the prop trading further and then the advantages and disadvantages before we talk about the strategies. So prop trading or proprietary trading, as known in our trading world, is when financial firm or proprietary trading firm uses its own capital or its investors' capital to trade currency pairs or other instruments they offer for direct profit rather than executed trades on behalf of clients. They provide you with the money. Simple. Okay, like angel investors for startups and for many other businesses, if it's real estate, if it's anything else, they give you the money to work with. As simple as that. How it works? So they are looking for skilled traders. They provide the capital, okay? And after you prove your skills, which you prove by making the evaluation program, and if it's instant program, fine. You pay the fee and you get your money to trade with. Uh, the traders receive the funds to trade with and use these funds to trade forex and other instruments. And the very important part, the profits are shared between the trader and the firm. Up to 95% goes to the trader. After you, of course, prove go through all the milestones and prove your skills. Up to 95%. I want you to think about that, guys, because this is so important. A lot of companies in the past used to pay 50% and then it increased to 60, 70. They are trying to, hold the main shares there. Here, up to 95%. You do you. As simple as that. You be your best version, concentrate on that, get the money. You work for that. get the money. They get their shares, they get their part from your success. That's from my point of view the key to this business. What's the difference between evaluations and instant funding? The evaluation program, basically, you have to go through a challenge, okay, or evaluation phase, it's called, to prove your skills. Usually, it involves profit targets, 8%, 10%, 12%. It varies between the programs. Drawdown limits and risk rules. Okay, you cannot do whatever you want. Don't forget, we're still talking about investors' money here. But you are flexible and you have the freedom to do it within the risk rules. Okay, very important thing. Once you pass this challenge, once you prove that you can work within the frame of the limits, you receive the capital that you will trade with. Usually, it comes with lower costs, but requires a little bit longer time because you need to go through the evaluation phase. You need to prove that. That's why it's cheaper also, usually. Um, and the instant fund prodding on the programs, on the other hand, you get immediate access to the capital, immediate access. Okay, and you start working. Okay, and the way it works varies between the programs, varies between the companies. You receive your program, you trade on the account it's given. If it's direct money, again, depends on the person, if already proves skill traders or not, or you receive the access to demo accounts which executes directly on the real account, the real funds that you trade with, and then your profit is going to you right away. No challenges, no valuation phases required, straight capital. And that's why pretty much most of my students I work with uh, prefer to go with this one. It's instant access to money. You can start trading right away, but it also comes with a little bit higher costs, usually compared to the evaluation programs. Okay, so the key differences, as we discussed here, you can see on this table, right? Advantages, disadvantages of each of the program, and generally advantages disadvantages of prop firm trading over your own capital program. So advantages, of course, you got access to larger capital. You proved your skills. You go through the milestones. Your account is doubled. Okay, I know most traders, when they come to the trading world, they do not have the patience to go through all that. Everyone nowadays want now and as quick as possible, instant. That's the reality, and that's the world we live in, right? Everything has to happen instant. And of course, it doesn't work this way. You have to go through milestones. The milestones are more than realistic, more than fair from my point of view. Usually, again, it varies between 8, 10, and 12%. You reach that, your account is doubled. Your personal risk is limited. The losses are covered by the firm, not the trader's own money. Yes, there is a fee that you pay for that, but it's also refundable, which means you have technically zero risk once you reach your milestones. Okay? Just follow the rules and you do your own style within these limits. The profit sharing model allows you to earn a percentage of profits up to 95%. We discussed about it already, and the firm covers the losses. You do not need your own investments. You don't need to risk your savings and work hard to allow yourself to trade 20,000, 100,000, and so on. And you get professional trading environment. You got the tools, you got analytics, you got education, like this partnership, for example, that we run now with FundYourFX and Home Trader Club. That's exactly the purpose. the educational and real-time execution, how it all happens within these trading techniques. Okay, and very flexible work style. Disadvantages, also the profit split, because after all, nobody likes to share profit. Everyone wants the bigger piece, right? But some of that you still have to give back simply because you trade not your own capital. If you think about it this way, when you take money from the bank, you pay interest rate on top of that. You have to return that plus more, right? So that's a reversed model. You basically share from your profits. Straightforward. Uh, Sometimes strict rules and restrictions. As I say, you cannot allow yourself to do whatever you want and risk all the investors' money, right? It has to be within some logic. Some programs and some places limits that with daily drawdowns not more than 5% or 7% and so on, maximum losses per day and so on. Okay, but again, here the reason I love to work with FundYourFX, it's the most flexible you can get. Okay? Just do you. Here is your maximum limit. Trade successfully. That's it. Performance pressure, psychologically, when you know you have to deliver, when you know you have milestones you have to do that, sometimes it puts the pressure in our brain and could limit the success of some traders. Fees, it comes with fees. Nobody likes to pay fees. We know that. However, don't forget, you get your access to capital, something you cannot afford or can afford but do not want to risk your own savings and money. Okay, and all that negative or disadvantages, I would say, they are basically here to help you. I treat them as advantages personally, not disadvantages. I treat them as advantages. The reason is because they force you to be responsible. When you trade your own money, most traders don't have the limits, don't have the barriers, don't have the stop. They can just go bananas and simply risk everything, and at some point will stay with nothing. That's how it works, as we know. So in that case, again, these disadvantages, from my point of view, are basically huge advantages because they force you to work professionally within limits. It's not hard once you get there. It's hard at the beginning. It's not hard after you get the idea, you accept it, and you learn to live with it peacefully. Okay? So very important. And final thoughts, and the way I see that, it is absolutely phenomenal opportunity for skilled traders. Yes, it requires some discipline. It requires a very clean, strong risk management. But this is your opportunity to get the capitals. And as I said before, we have over the years hundreds of success stories. Traders who passed the evaluation phases, who passed the challenges, and traders who got instant funds and trade for a living. Some of my students already in a place where they own their own funds, funds companies, private companies. So just understand the potential of all that. Okay. So before the chart, strategies that you need or elements in that case you need to have in order to get trade successfully, and then we'll talk about the charts and the techniques for entries and management. So first of all, of course, risk management. You have to work with stop losses and take profits, or have yourself clean. If you do not love to work with stop loss and take profit, then clean exit plan. What happens on the chart that you cut a trade? If you just trade based on hope, like I hope this will happen, I hope this will happen, then at some point the market will catch you. So you have to be very specific, precise, and straightforward, disciplined with your exit. Okay, for most traders, stop loss is there for the mental uh, so protection. Right, it protects you from making the mistakes. Maintain low drawdown is key. I know everyone is loves to trade with leverages, but leverages have it's a double way sword. As simple as that. If you think about it, leverage can lift your profits to level, imaginary level, but also can make you lose faster. And when you use leverage, you basically trade with capital you don't have on your hand. You like borrow money, which means your volume size, your lot sizes are bigger, and which means your risk is bigger. So less move against you is required to kick you out of the game. So you have to maintain low drawdown, which means stay with very low or none leverage, okay? Or stay within a very specific maximum loss limits. And every company allows its own rules, yeah. And you have to use, of course, proper position size, right, to avoid over leverage trade as we discussed, and also avoid over trading, which is important. You have to have consistent trading plan, very well defined strategy, which makes sense to you. And very important things here: don't emulate yourself to others. Don't try to be someone else. The strategy you use has to make sense to you. Something you can understand, something you get its logic, something you can relate to, sometimes you can execute specifically, successfully. Okay? It has to be something that speaks your language. You cannot, over time, do something you're not comfortable with. It's that simple, guys. It has to be very well structured for you. That's why, as I said at the beginning, I simplified what I will be showing today here, so you can execute very, very specific ways, and mainly understanding the logic. Okay, trade very few selected pairs, because if you try to over um, trade with different instruments and different trading worlds like stocks and commodities and cryptos and forex, and you don't have the concentration to do something when it happens on the chart. You lose concentration, you lose focus, and you would be missing opportunities after opportunities after opportunities. So stick to the very few selected that you again work the most successfully with. Avoid over trading. It's obvious we discussed about that. Discipline and emotional control. Avoid revenge trading. This is disaster for beginners, and not only. Sometimes we just lose it. We lose the patience. We develop some anger after a streak of losses. We want to get our trades immediately back, and usually it just leads to the wrong places and faster losses. Follow rules strictly, predefined rules very strictly. Develop a routine. Routine is so important in every aspect of our life, and in trading as well. Routine has to be the times that you trade, how much time can you dedicate, the strategy, the rules, and of course, if you cannot execute it within this routine, then just don't do it. Many traders try to do things in between. Enter trade now, then take care of the family stuff. In between, try to watch the chart here and there without the real concentration. It's not going to work like that. So the way you trade has to be a very, very clean, predefined, strict, uh, that will allow you to develop your routine. Market analysis and adaptability. So I really recommend using technical analysis, fundamental analysis also, to understand where the wind blows, where the money flows. Combination of both is important. I myself, as I mentioned before, internationally certified financial technician. I rely on charts. That's my 90% of my executions. You learn to read the charts, you understand what happens also on the fundamental, but knowing the fundamental strong basis is very important and helpful. Adapt to changing market conditions. Sometimes there is a trend, trade the trend. Sometimes there are no trends or key obstacle levels reached. Understand that your trend might be now blocked. Look for possible reversals. If it's ranging, behave within the range. The volatility change, the trend change, right? And it's very important. Sometimes pairs like euro dollar, pound dollar are more volatile. Sometimes that will be crosses. Sometimes that will be the yen pairs. Again, it all changes, right? and mainly keep learning and improving. Never think you are the best you can be. There is always a room of improvement, and I said that after 19 years of experience. Okay, every time you have to review your trades, you have to polish and refine your strategies. Um, it has to be obvious, which is not, unfortunately, for many traders. So spend your time to learn your trades, the good and the bad ones, and of course see where what should be improved and where to improve that. Risk reward ratio, key. If you want to trade successfully, aim to get positive risk reward ratios. We will see that in the strategies, of course. It ensures that your rewards would be basically outweigh the risk. If your average risk is 1%, your risk reward ratio should be higher. What is higher? It could be 2%, it could be 1.1%. But anything that will allow you to make money even on the success rate of only 50%. Risk reward ratio is critical. We will talk about it later, of course. So, risk control, discipline, and consistency, that's your mental strategies to work with prop firms and trade successfully. Charts and the techniques. It's time, right? So what I'll be presenting today is how to work with price reaction. There will be no indicators here, not because I don't use them. I love indicators. And for those of you who follow me in Home Trader Club, know that I work with a very specific combinations of divergence convergence within cycles or within price action reading. So today I'll be presenting how to work with the price only because this is where it all starts from. Then indicators can help you and indicate of coming or upcoming conditions, changing conditions. But indicators indicate, price dictates. You learn to read the price, you learn to specify your levels, you learn predefine your levels, you know to find them correctly, and you get your chances increased. And that's in the trading world and trading business, have better odds when you start your trade means your accuracy rate will outperform other traders over the long run. First of all, the very basic bullish trend stands for the conditions where the sequence of highs and lows going to the upside, meaning higher highs, higher lows. Okay, sequence means more than two. Okay, which means as soon as the second peak is broken, you are now already in developing bullish trending conditions. Okay, bearish trend, a mirror to the previous image, sequence of lower highs, lower lows, more than two, meaning as soon as the second low is broken, you are now in established bearish trending conditions. So why it's important? Because within understanding the momentum or the waves or the trends, we would be learning and looking to use key trading levels. If you think about that, what are key trading levels? That are the levels where buyers and sellers proved their interest. Where do sellers take control from? Think about it. On peaks. Buyers were in control, sellers came in and pushed the price down. That's a zone that belongs to sellers. Why the sellers chose to take the control at this specific place, we don't know. We don't really care. But there were enough reasons that made it, this instrument change the direction and drop down. Okay, sellers are here, sellers are here, sellers are here. Also in a downtrend, where are the sellers? On the peaks, always, right? They reach a peak, they push it down. And the combination of peaks in different trends, uptrend and downtrend, proves to be supply zones. That's where sellers take control. Now, there are millions of different definitions you can find online, smart money concept and other ways. It is all marketing titles YouTubers give to very simple methods, okay, where buyers and sellers show their interest. Sellers take control when the price peaked. Buyers take control when the price dropped enough, like in this case. Okay? And where it's dropping, it's enough, buyers take control from here. Buyers proved interest here and here and here. Yes, they didn't do much. They didn't change the trend from there, but they proved their interest here and here and here. Now, you can say that, but no, it's not buyers, it's just sellers closing positions. But when sellers close positions, somebody needs to buy it back. Okay, so there is enough reasons here because sellers were also closing positions in all of these spots on the way, but not buyers, not enough buyers were there to make the price actually bounce back. So all the titles you would see ever online and beautiful names are great for YouTube, not for your understanding. It is all based on the same read, highs and lows, open and close. If it's candles, if it's bars, or if it's trends. And that's what you have to rely on. That's the data you need in trading. That's how you define the key levels. Highs, lows, open, close. Okay, so the lows in downtrend and uptrend show where the buyers took control. And the combinations between the two different levels here and here create the zone for you. That's the zone where you would be able to execute your trades with high probability. You will see that. Okay, so this is how we define the levels. Another important thing to understand about the supplies and demands is where the hidden zones are, or where the sellers gain momentum, gain power, not where they took the previous control from, not zones of interest, but where they gain power. Because from this peak, let's call that H1, what happened is sellers pushed the price down, then we got some range. Note, buyers are not in the game. They are unable to push it back, right? So there is a range, which means not enough buyers coming in, show interest and push the price upside. Sellers are loading their money, preparing their future moves. And at some point, what you will see here, that this range, which could be 1, 2, 3, 4, 5 candles, but tiny candles within bigger candles, which we will see soon, then big momentum out of the range, which continue with the sellers. That becomes the zone of sellers, where they were loading the money and then uh, um, made it move in the direction they already gained, the momentum they already gained. Okay, as soon as this area would be retested, you would be looking for the opportunities to join the trend that you had before. Okay, here is how it looks like. This is euro dollar. It happens actually these days, so you can see it on the chart. Look what happened here. Double of what we discussed, right? We have a peak of highs and lows here. Sequence, not peak, sorry. We have this peak, which is now retested. Then we had high, low, high, low, high, low, high, low, right? And what happens now is the price retesting this zone here. Okay, now take a look. Besides the swing highs and swing lows, which are now retested, this is the zone of sellers. Sellers did prove their interest around this area. But not just that, look what happens within this circle. Okay, look what happens. This is a key to understand. Look at that. You got a swing between these higher highs, higher lows. Now, boom, this low is broken, lower lows. But as soon as the low is broken, right? Look what happens within this circle range, and then boom, big exit with this candle out of the zone. This is the area of sellers. Meaning what? If this area would be retested, because we don't know if it would be retested, but if it is retested, this area already proved to be a zone of interest by the sellers, supply zone, which means we have high probability chance to see the price dropping down from there. You understand, guys? This is how it's important to get the levels first of all, and then to look to execute the trades, which we'll be talking about in a minute with two different strategies. This is the mirror to the previous scenario. We got a sequence of lower highs, lower lows, which is a downtrend. Then it flips, makes the buyers take control, take a push, range, right? They load the money, and then boom, you got a candle that explodes through the zone and make the push to the upside. Okay, as soon as it is retested, that's your buy zone. Okay, you look for specific price rejection here, and then you look to execute. Here is an example. This is gold, I think. Yeah, it's gold daily chart. Take a look what happens here. Let me take straight lines. Take a look, guys. High, low, high, low, high, low, high. Then we got some correction. You got this correction breakout. Then it'll, you see the money loading here for 2 straight days, and then boom, big candle out of the zone, breaking the previous highs. Boom, straight, breaking through the previous high. That becomes your zone of interest here. If it would be retested, you know that you got your chances here, and you should be looking to execute the buy. I will show in a moment how. Okay, so this is how we define key levels. When you define key levels, is there any sort of guarantee it will be retested? Of course not. Is there a sort of guarantee it will be respected? Of course not. But there is a guarantee that once it is reached, your chances are there. And if there is a specific price rejection, that is a sign for you that the buyers and sellers are likely to take control. When I say likely, remember, every trade you start with a probability to work or to fail, 50-50. But when your odds are higher, and your odds are higher from proven zones, levels, where you actually joining buyers and sellers, not random price reactions, but price reactions from key levels, you instantly increase your chances. That, with proper risk management, gives you the edge you need to trade successfully. Now let's talk about the uh, triggers. Okay, so there are a couple of triggers, and once again, I want to separate that from those of you who are in Home Trader Club or that will be learning from Home Trader Club trading strategies. You would see me also combining indicators here. As I mentioned before, indicators are fantastic. They indicate, but the price gives the green light. In other words, I would never recommend trade only with indicators, while you can trade only with price. Know the difference. So there are a couple of triggers here which I personally love the most. One a little bit more aggressive, one a little bit more conservative. The aggressive one is the trigger one. What I love to see here is a price rejection in terms of candles or bars. Those of you who know candles like engulfing, harami, dark cloud, piercing, evening star, morning star, triple soldier, and so on and so on and so on. Fantastic. This is a great, helpful knowledge, right? And tools you have in your hand which you can use. Those of you who do not, I recommend to watch the highs and lows, close and open, which I'll be explaining in a moment. So what you are looking for, first of all, is when you got a trend, right? Remember, highs represent sellers. Then the trend changes, we now have lower lows. And then the price bounces back and comes to retest the previous peak zone where sellers already showed interest. As soon as you reach the zone, you do not know if it will be holding. But if you will see one of these triggers, you do know that you have your chances increased right now. So what you want to follow is a sequence of higher highs, higher lows in the candles, which changes to lower highs, lower lows, two in a row. And ideally, you would want to see that happen in this way. Some convincing green candles, which change with red candles, or at least one red candle. Okay, what does that mean? You got a sequence of higher highs, higher lows in the green candles, right? And then from the last two candles of the higher highs, higher lows, you now switch and makes lower highs, lower lows, while the low of the last two rising candles is broken. This gives you the ideal call. Pay attention to the bodies, because if you have candles which look like that, big spikes but no bodies, that means there are no real sellers during this session. If it's 1 hour, 4 hour, or daily candles or weekly candles, you will want candles where the body is meaningful, not just dodges. One doji could be still okay, fine, acceptable, but when it's a sequence of very weak candles, that's not enough to understand sellers take the control. So you will want to see sellers taking control with convincing candles. In some cases, what you will see is inner candles. Let me show it to you how it looks like. So what you will see is not direct breakout, but first of all, you would see something like, one second to draw, something like that. Inner candle, and only then a good red candle. While this is still acceptable, it's sometimes a bit weaker sign when the first candle is inner. Again, it's still usable if the level is there and holding and rejecting, of course. But this sign, when the last two candles are instantly broken with the break below the low of the last two candles, this inner candle here, first of all, is a little bit weaker sign. Okay, so that's about the trigger number one. Trigger number two, which is the second strategy, is what I call the flip. Okay, usually it is also for those who follow indicators. You would find indicators of trend change or divergences here, and then joining the trend with convergences, which is when indicators and price will tell you the same. So what you will want is sequence of higher highs, higher lows. This is similar to what we saw the trigger one here. Then the break of the recent low of the uptrend, now lower lows on the chart. You want to bounce and retest the zone of sellers. Okay, and on the lower time frame, that's why it's black here, right? It could be same, it could be one lower time frame. So for example, if you are analyzing daily chart, your execution should be based on trigger on a daily chart or 4 hour chart. Don't drop to like 5 minutes or 15 minutes, it's irrelevant. And what you will want to see on the, again, daily or 4 hour chart is the flip of sequence of higher highs, higher lows to lower lows. And then you want the pullback, right? Rejection by the candles as we saw on trigger zone one, and then get the sell. Okay, take a look how it looks like on this example. This is dollar yen, which happened to be recently in the last couple of months, as we are talking about weekly and daily chart. So what happened there is we had a clean trending structure sequence, higher highs, higher lows. then it breaks down, right? Then after the breakdown, the price goes up and reject the zone. Now, you can see that the peak is here, but this spike is already the area to understand where the sellers actually taking the control from. Remember, supply and demand, it's never a level, it is a zone. Similar to support and resistance, it's never a level, it is a zone. And the reason it is a zone is because the market is not perfect. There's no rule that on a specific level buyers or sellers will take control from. Okay, remember that, very important. So what happens here, we are back to this key zone. Sellers, they already proved their interest. Okay, at that point, can you know in advance that sellers will take control? No, you cannot. But if they will reject around this zone, you know that you have a high probability setup. So what you would be looking for is the last two candles that shift from higher highs, higher lows to lower highs, lower lows. In our case, these are the last two candles that make higher highs, higher lows, higher highs, higher lows, and then we shift to make lower highs, lower lows directly from the zone. This is a trigger one execution, which happened within these candles. Okay, about risk reward, we will talk about it in a few moments. First of all, the difference between the triggers, right? So this is the first one. This is trigger number two. Not always they will happen simultaneously. Sometimes only one of them will happen. You don't know to predict. That's why I showed you both triggers, so you know to work with them when you recognize them. What happened here, this is the lower time frame, right? This is the daily chart in that case, while the level was spotted on the weekly chart. From a sequence of higher highs, higher lows, we shift from higher highs to lower lows. You want this pullback, and then same story. Once you got the rejection and the candle start to make the lower highs, lower lows, you get yourself a green light for the trade. Okay, let's talk about how do we execute the trade. So once you spot the conditions, either, let's go back to the first trigger and then we'll talk about the second trigger. By the way, can the first trigger also be applied on a lower time frame? The answer is yes. It could be on the same time frame as the analysis, the original analysis you did in the level you spot here. It could be same weekly chart or one lower time frame. Both are acceptable as long as they're executed from the zone. Okay, so once you spot that at the end of this candle or the beginning of the next candle, you got the green light for the sell. Your target, your risk, let me just draw it here. So this is the sell, this is the stop loss, the protection, and in trading you always move from level to level, from supply to demand, from demand to supply. If a current supply demand doesn't hold, you go to the next one. So the first zone is here. Why? Because that's where the buyers were. So from sellers to buyers. And what do you have to make sure you have here? Positive risk reward ratio. Meaning, if this is your reward and this is your risk, the reward should be bigger than the risk. How much bigger? The bigger the better. 1 to 2, 1 to 3, 1 to 5, 1 to 10, the bigger the better. The problem is, of course, it's not always doable to catch these huge moves, right? That's why, as a rule of thumb, bigger means if you risk 100 pips, for example, and anything above 100 pips already work in your favor, already help you to make profits, even if you work only at 50% accuracy rate. Okay, that's very important to understand. This is the numbers that you should be paying attention to control, because numbers never lie. Indicators can be wrong, level can be wrong, and so on. Numbers will always tell you the truth over time, of course, if something makes sense or not. And make sense is when your execution is in a way that your risk is smaller than your reward. So if you risk 1% and your 1.5%, your target, or 2%, or 1.1%, doesn't matter, right? Then what happens here is for 50% success rate, you would be doing, in that case, 0.5% net profit. You lost 1%, you profit 1.5%, 0.5% profit from 50% success rate. That's why it's key to understand. And in terms of trading, that should be your leading guide. Risk, reward has to be bigger. What do you do in case that the reward, in that case, is, let's say, smaller, right? The risk is bigger than the reward. Then wait for the pullbacks. If pullback happens and you would be looking to enter here, then your reward immediately increases. No one guaranteed there will be pullback. If it just goes down, then you just skip the trade. But if the pullback does happen, your reward immediately improves and helps you to maintain positive risk reward ratio. Let's take a look how it looks like on the buy direction. Clifford, these are bull and bear traps to me. Absolutely. Absolutely, I agree with you. That's also called the traps, where the buyers and sellers set up in a way. By the way, and when I was working for the private funds, it was an options trading. That's what I was trained for. Create traps. That's what we were doing. Creating these traps around the key levels. Something that looks like now sellers are taking control from, but actually it was just to attract sellers' money to get in a bigger buy. So you are absolutely right. It's exactly that. So for the buys, it's a mirror to what we saw before. Lower highs, lower lows. This breaks, low is retested, and then the candles flips from lower highs, lower lows to higher highs, higher lows. It's a mirror to what we discussed before. Okay, similar to here. Sequence of lower highs, lower lows, flips, making higher highs, higher lows, retests the key zone, and on the same or the lower time frame, you would be looking for this price change. Okay, from lower lows, higher lows, lower lows, lower highs to higher highs, and then pullbacks, and you get the buy. Take a look on this example here. Euro dollar weekly chart, sequence of lower highs, lower lows. Then we make the price flip. Look at that, how it actually happens to be. You can, of course, go that high, low, high, low, high, right? And then we retest it. We came back to retest it for the first time. We don't know if it will, but if it will, that's where we will be looking to get the trades. So the zone defined. And here we go. Trigger one, double attack. First, second. On the first attack, what happens is, if you remember, I was presenting you the inner candle. That's an inner candle. That's a little bit weaker sign. However, we cannot ignore that the next green candle and this green candle are significant candles with big bodies. So this is right from the zone, right? Absolutely fantastic. Why did I ignore this sign first of all? Because it doesn't give the conditions of the higher highs, higher lows. So not enough for me. Okay, that's where it breaks. And the last two bearish candle is broken here as well. Lower highs, lower lows. This candle is broken, and now higher highs, higher lows. So buy, stop loss, take profit. One, take profit. Two. Okay? If the risk reward ratio is good here, you got a green light. If not, pull back and buy. When? As soon as the risk reward works in your favor. Okay, so the first one fails. Then comes the next one, the ideal one, from lower highs, lower lows within the two candles. See? Boom. And this peak is broken of the second candle. Broken. You got a beautiful hammer followed by a full green candle. What can you ask for? Fantastic. Okay, so entry, stop loss, next supply. Where is supply? You remember, guys? Lower highs, lower lows, right? That's your supply. So from demand to supply. If the risk reward is good, you got a green light for your trade. If not, you are waiting for a pullback and then you look to attack. Okay, and this is sort of trigger number 2. So this is the weekly zone we predefined. Once again, I want to remind you. Of course, I show weekly and daily here in these examples. It can work with similar with daily and 4 hour, or 4 hour and 1 hour, or 1 hour and 15 minutes. It's absolutely fine. And just for the examples. Of course, higher time frames have higher probability due to their reliability level. Okay, so the euro dollar, this is the weekly level we predefined. We come in and we flip from lower highs, lower lows to higher highs, higher lows. And if we get back to the zone, right, from inside, we are looking for the candle rejection. Boom. Two candles making higher highs, higher lows with a big gap from the bottom, which is absolutely fantastic sign, right from the weekly zone. Green light to get in the sell, in the buy, sorry. Okay, so buy, stop loss, take profit. If the risk reward is limited, wait for a little pullback and your buy is going to be much bigger risk reward right now. No one guarantees there will be pullback, but if there will be, your chances or your risk reward is increased, and that's what you need. Okay, so on the previous setups here, loss, let's say 1%, profit, let's say 1.5%, just for example. Okay, because the risk reward is clearly in your favor. It's more than 1.5, just want to show you. And that's the power of the risk reward ratio. That's exactly the power of risk reward ratio. You will not be able to win all of them, but the ones you do will help you to make more than the ones you lose. And within 50% success rate, you would be making more than you are losing. It's that simple when you understand the power of numbers. Where is that? Here. This was to present the techniques, how it looks on the chart. For risk management, which we already understand how much is the key, here are the important tips. You have to be very precise and strict with your stop loss take profit. Why? It helps you to avoid the mistakes of losing control. Sometimes the market will go so fast against you that if you don't have stop loss, you would find yourself floating in a loss much bigger than you need to be in. And you have to understand, some trades would be losses, accept that. Okay, follow the firm's drawdown rules. Every firm has specific clean rules. Some limit you by daily, some limit you only by overall limits. That's why I love the FundYourFX, because they are so flexible. You will see in a moment. So it's only about the overall drawdown. Okay, and never risk more than the firm allows. Why? Because if you do, you would lose your funds. The responsibility is your hands. It's up to you to decide how you deal with that. But remember, your loss here is limited. Your loss here basically is only your fees that you pay. While when you trade your own money, technically no one, unless it's your wife, voice, no one limits you to lose everything. It's much harder to control. So these limits, from one side, they are theoretically against you. From the other side, they are in your favor. Okay? Use proper position size, never more than 1%, maximum 2% per trade if you do not over trade. So you want to stay within the acceptable limits. I personally love to trade even less than 1% trade, simply because it's much easier to control. Yes, you grow slower, but you sleep better. So you decide on which size you are, which side you are. Control emotions and over trading. It's easy to say, but you have to understand emotion is not something you can avoid. Emotions is something you can live peacefully with. You can understand what triggers you to do the mistakes and then look to avoid to trade when you recognize these emotions, recognize this feeling. Okay, avoid over trading. Over trading, more is not more, less is more. Over working out is bad, over dieting is bad, over trading is bad. Over is always bad. And if not even if you feel it in a specific day or two, but on a after that you would start to feel that over trading is hard, over trading is bad. Why? Because it's much harder to control your trades, it's much harder to stay within limits, it's much harder to monitor all the trades and all the charts and the changing market conditions. So stay within the limits that can preserve you, that can help you to control your trades better. Okay, look only for the high probability setups. This happens when your setup is set on key trading levels like I presented you here today. Keep your trading journal. This is key. So you know how you are performing, going, and then you can always review that and in order to refine and polish your setups. And mainly remember, risk management is more important than winning. Protect capital first, profits would follow after that. That's something I couldn't understand when I started. I admit that's something I very clearly understand now after years of experience and all the possible mistakes I was doing. Special offer, as I promised. Straightforward, no hidden lines, nothing like that. Very straightforward. As part of the partnership between Home Trader Club and FundYourFX, here is the offer. You join Home Trader Club all-inclusive annual membership and you get to choose one of the direct funding program, which could be the free instant funding program with max capital up to $150,000 or one phase evaluation with max capital growth of $300,000. What does it mean? We pay for you. You do not need to pay for this challenge. Why? Our goal in Home Trader Club, straightforward, success stories. I teach and I show how I do, what I do, when I do, so others can follow. Your success means Home Trader Club deliver its success to its members. When you become successful trader, when you prove you trade successfully, if it's your own capital or funding capitals, that means Home Trader Club did something good. And as a thank you for learning with us, thank you for learning how to implement your trades and execute your trades properly, learning the techniques and delivering our message, forwarding our message. Again, your success, Home Trader Club success, straightforward. As a thank you, we fund you directly. What does it mean? This is the one of the programs you choose. Once again, from the annual all-inclusive packages. If you go with instant funding, this is the one we fund you right away. Up to $150,000, you got instant 5K to trade with. Profit sharing up to 95%. Target milestone 12%, maximum drawdown, no daily limits. Maximum drawdown is 7%. Or if you want more capital, you go with one phase evaluation, which means you need to reach the first milestone within 1 second. Oh, here, sorry. This is the program, okay, of one phase evaluation. You start with 10K, but your growth is up to $300,000. As soon as you reach the first milestone, which is 10% in that case, not 12, 10, as it's not instant funding, you are doubled. 20, 40, up to $300,000. So how to get that? As simple as that. As I said, very straightforward. No hidden lines or anything like that. You visit Home Trader Club, you click to join, choose this package, annual, all-inclusive package, which includes your access to all of our trades, all of our education, the courses, the videos, the trading opportunities that deliver to you in real time, all of the systems and indicators, and of course, direct funding, which I just explained. One of the two you choose. Choose the one you prefer. Contact us by support.hometraderclub.com or me directly in Telegram. Once you are in Home Trader Club, you know where to contact me in Telegram because you have the access to the groups. Okay, contact me, and from there we will make your funding happening. That's simple. So that is pretty much it for today. I really appreciate you guys finding the time to be here. I hope what you saw today was the strategy with this approach to trading from key levels makes sense to you, and I hope it will help you in your journey getting funded. We are here for you to help you in your step. As I also mentioned, we are funding you straightforward, direct, no hidden lines, no secrets, no conditions that you don't see. Very straightforward. For any questions, we are there for you on this email, as I said before, or by Telegram. Feel free to reach out. The recording should be available among the channels of FundYourFX and my own channel, which you would all be able to watch. Thank you for being here. Enjoy the rest of your day. Best to you and yours, and I'll see you soon with more.